Brandon, I'm so excited to talk to you today. I'm going to quickly introduce you so everyone else can be as excited as me. So we're recording this in the end of December, and you're going to finish 2025 with 75 million. You started this company alone. You were literally processing your own loans, and now you have 12 people in your company working for you. Most of your production is in states that you don't live in, Arizona and Texas. You live in Colorado, which I really want to dig deeper and see how you managed to do that. And finally, you've experienced every part of this LO life. You've been a captive LO for a builder. You worked in a retail company for an actual bank, and now you're a broker owner. So I'm so excited to get into it.
Awesome. Hey, Sam, super happy to be here. Thanks for the invite. This is my first podcast, man. And you can tell I came super well prepared because you can look behind me. The office I'm in is a complete disaster for Christmas with all the kids' presents. So, please excuse that. But thank you again for having me on, man.
Thank you for being here. That's actually a great segue to the first question I want to have. Like, you literally have a room full of gifts behind you. Like, what is life like when you hit that 75 million mark? Like, because a lot of people, like including myself, want to know, what does your life look like?
Yeah. So I would say, obviously, the income is huge, right? It's great to hit that number. You can make quite a bit of money. But there's a time trade-off, right? You got to make sure that, if you're a single guy, hey, great. Single girl, fantastic. Having a family can definitely compound things. So I'm very lucky and fortunate that I have, my wife is, superwoman, and I got 3 daughters, and, she can kind of manage the house for me and make sure everything is good on that side. So, because it's a lot of hours. I mean, there's nights where I'm at, going till 1 a.m. I mean, there's 80 hours a week. I mean, it's a lot, especially with a small business like this, because we're growing something, we're building something really cool, really unique. So from a time aspect, it can be a lot, and it can sacrifice some things as well. So obviously the money's great. It makes, you can really treat the kids and spoil everybody on Christmas, but there's definitely a huge time trade-off for sure.
The first question that pops into my head, and it's a 2-part question, is it worth it? 1 for you and 2 for your family.
Yeah, for me personally, it definitely is. I think, I don't think this is a sustainable time investment for the next 10 or 20 years, right? But we're building something, right? And I think whenever you're building something, you got to give it your all. It's kind of like your baby, right? So you really have to invest every, blood, sweat, and tear possibly into this. And hopefully I can create a culture. Hopefully I can create some guidelines and boundaries where, maybe eventually as we progress and things get going, as the staff increases, that maybe my 80 hours a week turns into 70, turns into 60. And who knows, maybe at the, maybe down the line, I'll work 40 hours a week. Who knows? I don't know if that'll happen, but we'll see.
So are you working 80 hours right now? Like, is that pretty standard?
I would say, I try to get to the gym, so my health has, really been a priority, right? Because working so much, you can obviously, tax your body a little bit. So I've really focused on my health a lot too the last year or 2 years. So that's been priority for me is, trying to get into the gym, work out, all that good stuff. Got to decompress. For me, I got beautiful Colorado Springs out here. So I go on, the weather's always good. We get 300 days of sunshine. So I get to walk, got to really decompress, right? But then from there, it's like, if we'll take calls, sometimes 7 a.m. because I'm working in, across the country, right? Like we service Florida, I service Arizona, which is in a different time zone, depending on parts of the year, Colorado, Texas, New Mexico. So because we're in all these different markets, especially Texas being so big, you're kind of always available. So I'll get calls 7:30 in the morning, at my desk, usually by 9, try to, get a coffee date in with my wife, who we actually work together. So we try to squeeze that in midday, right? So we'll try to have like a business, date / coffee meeting. Usually we try to do that a few times a week. But then, kids get home from school, try to give them a quick 20, 30 minutes around 3 o'clock. Sometimes, we're so busy that I'm not there at the dinner table, which that's like my big thing in 2026 is trying to make sure I'm at the dinner table. And then, kids get to put to bed and 8, 9, 10. There's some weeks where I'll go 3, 4 consecutive days to like 1 a.m. because we're doing marketing, aspects. So, I'll use a lot of freelance companies like Upwork or Fiverr, right? And then reach out to some of those individuals that are all scattered over the world really. So their time zones align where it's super late at night. So I'll be working on marketing stuff with them, building flyers for my builders, all that good stuff. So that's kind of later on. Most of my client related stuff starts to calm down by, I would say 9:30 at night. But still it's, I mean, you got to be available when people are not working, right? So people who have a 9 to 5, they're running their kids to practice, they're running their kids to school, right? They want to have dinner with their family. They're calming down from their night, 6, 7 o'clock at night. It'd be great to be that guy. And there's a lot of loan officers that can be there. But for me starting out, it's like the sacrifice where I'm like, listen, I'm going to be available for you. I'm going to be available. This is these are generational first-time home buyers in some cases. This is the biggest purchase that people are going to make. So why not, and my wife she gives me like kind of a look sometimes, right? Like, cause I'll even be in bed, right? We'll be watching like, something on Netflix, right? And, 9:30 at night, and she'll kind of give me that look with the phone ring. I'll be like, listen, 2 minutes. And then it might turn into 10 or 20 minutes, and then I got to go like, in the other room sometimes. So yeah, but it is worth it. Whenever you're building a body of work and you get to see where you start and where you've come, how can you not admire it and appreciate it? And your hard work is paying off. You can actually see the dividends,
Yeah. It's, I'm struck by how your mind is going through all the different domains of your business as you're even like answering my question and talking to me. Like you covered marketing, operations, client experience, staff, everything. Like you are so ingrained into every part of your business. But one question before we go into that I have is, did you say your wife works with you as well?
She does. So we ended up starting, we had her get licensed as well. And she ended up kind of being an ancillary business to our company to help service with the processing and closing. So we get to kind of work. So she helps me with like payroll. So some of the things I really can't dive into as much, compliance, payroll. We ended up bringing other compliance in guys. Sometimes she helps me with licensing. So all these, she always says all the stuff I don't want to do. It's like, yeah, okay. So she's a little bit more, mostly in my experience, women are more detail oriented. So when it comes to the detail stuff, I got to get the ladies involved and get me covered so I don't get in trouble out there. Yeah.
I love it. How is it working with your partner, with your wife?
So I have my office on one side of the house and she has her office on the other side of the house. So it's, for all intents and purposes, it's great. It's, when I first brought her on board, she wanted to put a desk directly behind me. And she was in for like a day. And I was like, do you realize that I'm on like 75, 80 phone calls a day? Like, I can't have you do a thing behind me. Like, what are you talking? You got to get out of here, So, but yeah, so we made it work. It's great. We have a really strong relationship together. A lot of what she does is more behind the scenes, like facilitating me. So it's like, talk about, hey, how is school with the kids? How's everything going? Right. All our little chit chat. And then it's like, oh, by the way, Arizona's da-da-da-da, right? Or, hey, Texas, we just did, right? So it's not so much a direct involvement back and forth on our day-to-day.
Gotcha.
Yeah.
It's the reason I asked that question is I get a lot of loan officers who ask me, like, should my partner, my significant other join me in my business? Sometimes it's like running the business. Sometimes it's getting licensed and being another LO. Sometimes it's processing. I've seen it in every shape or form. I know my wife says literally no, hates the idea of even working with me.
Yeah.
For you, do you think it's worth it to have a business that is everyone in your family relies on?
I think it helps everyone try to achieve the common goal, right? So I think we're raising children, so obviously we have the same common goal. We want to be great parents, want to provide for them. Well, now we're providing for our children. Well, now we're both invested in the same aspect of providing for the family. So they understand, your spouse will understand that sacrifice, right? Where it's like, hey, dad has to, fly, here for work and he's going to be missing this, because sometimes that can be very stressful if you don't have that support or they don't understand what it actually takes. I think she was getting it a little bit when I worked for other companies, because I was still giving 60, 80 hours when it wasn't even my own business just to try to build something. And I think she used to question it. And then now that it's like our own business and she's seeing everything, she's like, oh, wow. Like she understands, because again, I really try to strive on the customer service aspect of like, okay, we have to give this time. So, but yeah, I think as long as you have the same goal in mind, then yeah, I think it's fine.
I love the answer that it kind of just aligns both of you around your family's goals and like what you're doing. Like everything falls under that. I'm I'm amazed by how driven you are. What it is, what drives you?
Well, I think I've always had this kind of untapped potential my entire life, and parts of my life kind of. I think I grew up a little bit later, you could say, right? And not until I met my wife. So I feel like I kind of started the game a little bit late, started mortgages a little bit late. And a lot of my family, I'm like one of 8, 9, 10 people that have been in mortgages just in my family.
Wow.
And some of them had, my brother included, my cousin, a lot of them have seen like really significant success, like being 100 million plus producers, 200 million plus producers, like, really big success in the industry. So that's definitely motivating, right? That's definitely encouraging to be like, hey, they did it. A little friendly competition within family, but just motivation to see like, okay, what did they do that worked? What did they do that I didn't like? How could I improve on it? And again, my brother was doing, a lot of this business, and my cousin for that matter, in a different part, right? So they were like kind of middle to tail end of their careers at COVID. So COVID was that little spike. Well, they've kind of made their wealth and made their business and kind of made their reputation now. I kind of came into this kind of post-COVID. And so it was already kind of more of a tumultuous kind of market, right? Where it was a little bit tougher. So the success I'm seeing now, they give me a lot of encouragement saying, wow, like, if you can build this, during this market, I'm really encouraged when things, eventually get better. Now, whether that's in 26 or 27, no, everybody's guess is as good as the other, but so that definitely is, I have a lot of optimism, a lot of faith that what we're doing is working.
Yeah, it's what okay, I will objectively say this, and I run a $250 million branch, and like what you built so quickly, especially in the niche that you're building it, the way
Yeah.
you're doing it is, I don't want to say inspiring. It, it it's incredible. For lack of better words, it's incredible. And like you've never hit 100 million in a year, right?
No, that's the goal. That's
It's just a
correct.
matter of when for you. Like the moment rates drop a little bit, like you will hit 100.
Yeah.
It's just, and it's like without doing anything, it's just your business will explode. Are you the biggest producer in your family now?
Well, so most of the family, nobody's really else is really originating as much. So they've all went into like management and kind of higher level different roles. One of my two of my cousins are still producing. One works for a captive builder. Actually, both of them. They both work for a captive builder. So I would, they're not generating their own leads as much. So I get to tease them a little bit and say, yeah, it's getting spoon fed too, But no, they're really good. The family. My wife always teases me. She said, my number one app I use, it's not like an Instagram or Facebook or anything like that. It's my calculator. My calculator is always my like number one app that I'm on nonstop. So yeah, constantly numbers in our household.
I love it. That's so funny.
Yeah.
I'm really curious about how you built your business. Do you mind like kind of going through the process that it took you to get to where you are now and how long it took?
Yeah. So I would say December of 2022, I started having ideas of like how I want to create this business. And, obviously the rates were getting tough. I knew builder was something that I really needed to dive into as trying to find builder relationships. But, even living in Colorado Springs, I couldn't just go down the road to like a, big box builder and just say, hey, I'm Brandon and I'm here to help you, because they already own their own mortgage company. So right off the bat, I was like, okay, I need to find markets where there's more medium to small size builders and see if I can present value to them. And then it became, as rates were getting higher, the builders were kind of reluctant early on to give like big incentives. I remember, so one of our builders that we worked with in Texas used to give like a flat rate of like $5,000. And the rates were spiking. We were getting par rates of, maybe somewhere in the threes, right? Low fours. And then with a buy down, that $5,000 we usually go to like closing costs, not so much like rate buy down. And then, so there was a stagnant period for a good 90 days where the builders were like not going to lift the incentive past the $5,000. Then they started realizing like things are going to go to a halt, get up to 2%, up to 3%. And now you'll see, I work with builders all the time, giving up to 6% incentive, very regularly. So that, but what I said was, okay, how can I reduce our costs, right? Like, so, let's go remote, right? We don't need to be in the office with this expensive office. It's got to be remote. All the kind of like cute little swag marketing, the pens, the Yeti cups, all that stuff, to me, waste of money, right? If I can't help a client get a better rate, if I'm not providing value to that realtor, that builder, and what's the point of spending it? So outside of my software, LOS, and all the basic stuff that you need to run a business, we tend to not really spend any money on it. So then I came up with this number, this kind of margin in my head where I said, okay, I can operate at this margin, and we can like dramatically affect the rates. But then I said, okay, maybe that's not enough. So then I started targeting markets around the country that were traditionally lower loan amounts. Because when you have lower loan amounts in these localized markets, the local mortgage representation from retail banks everywhere, they're naturally going to lift their margins, right? So they're going to charge a higher premium in the rate stack. So that I knew these were high interest rate markets, traditionally lower loan amounts. But now everything from COVID accelerated. So a lot of these price points accelerated very rapidly. So I said, okay, I can interject myself in a market where nobody really knows me. And how could I tell them I'm great at sales, or I can help your client, or customer service, or all these things? Nobody's going to believe that. But if I could come in with a 0.25%, 0.5% rate right off the bat, okay, you got my attention. Go on. And that's pretty much what I did.
Amazing. I don't know why Southwest Airline jumps into my head when they were really good.
Yeah.
It's like you found inefficiencies in the market, and you're like, I'm going to exploit that to my advantage and make sure this segment of the market who's underserved gets the best. Like I will dominate this and make sure they get really good.
Absolutely. Yeah.
My first question is like, how did you decide to go after builders? Like, was it just because of your previous experience, or was something else? Like, and did you have another plan if the builder wasn't going to work out?
Yeah. So the whole family, like literally at the time, about 5 or 6 of them all worked in builder capacity in some point or the other. So my brother was like working for Wells Fargo way back when, had captive builders. So I understood how valuable it was to have those relationships, because I think of it more as like building a bigger account or farming instead of hunting, right? Like you got to do a little bit of both. You got to get out there and you got to hunt day to day. But if you're only going to eat what you kill that day, what happens if you strike out? Then you don't eat. So it's like you got to have the farming aspect and the hunting aspect kind of merged together. And that's kind of what's important with, with builders and, with big real estate teams. You could do the same type of thing as well and provide that value to bigger real estate teams. So we started, that's kind of the main thing. But I didn't really foresee, I'm more of the type of guy where it's like, I'm going to give it my all. I don't try to think of a plan B right off the bat. It's like, hey, this is plan A. This is what we're going to do. If it doesn't work, I'm going to tweak plan A, in real time and then proceed with it. I didn't really have like a backup plan B or C if this didn't work out.
Gotcha. And you're just like running in, and you mentioned to me that like it took a while before the results came really. Like, what was that process like?
Well, I mean, I was hopping flights with no plans, no meetings, nothing, and just going out into Texas and going out into New Mexico and just like showing up at builders, model homes, and getting cars and being like, hey, I'm Brandon, this is what I can do, and kind of giving my whole spiel. And a lot of, I would say probably 60, 70% of people kind of looked at me like, this guy's a little nuts, right? Like, who is this guy out of nowhere, right? And then a couple people were like, hey, I'll give you a chance. I got this crazy situation. So that's when I learned that I had to really dive into the investors and the wholesale lenders that I partner with. I had to be able to do like tough loans, because that was going to be the easiest thing. Is like, okay, it would be great to have great pricing and you can get a squeaky clean file and someone just rate shopping. That's great. I can help them. But a lot of times with these builder reps and everybody needs like, I need someone that can do tough loans. So then I was like, okay. So I went into heavy VA markets, right? And partnered with lenders that really didn't have any overlays, taking no minimum credit scores, taking maximum DTI, and just learn the in and outs of like, okay, this is, if we're going to do a manual underwrite and a VA, or we're going to do a manual underwrite and an FHA, this is how we're going to figure it out. And we can confidently do it. When we write a pre-approval, we're not going to bomb that in that builder. And that was my promise to them. If I write you a pre-approval, we're going to close this loan for you. And it worked. And then, before you know it, you save a deal or two, you close a 430 FICO VA loan, people start, kind of like being your cheerleader for you, right? And so it caught on pretty quickly.
Gotcha. When you were going to these builder sites, did they know you're showing up, or you would literally just show up?
No, I would just show up with a flyer, some business cards, like kind of walk on the model, chit chat, just kind of like let my personality shine, get to know them a little bit, get to know, some of them kind of like brushed you off. A couple times I'd try to get to the gatekeeper, right? So I've been in sales, my entire career. And so, you have your model rep, but then it's like Texas is different. If it's not a real big box builder where they hire like an internal employee, a lot of them were facilitating with like real estate teams that would sit in model homes. And then that real estate team would kind of field it. So a lot of it was like, okay, I got to get to the listing agent. I got to get to the main guy. Okay, I got to get to the owner, the builder, and so forth. And, a couple really good people were kind to me and took a shot. I think they just were nice people. They took a liking to me early on. And, and I think I was responsive. That was the other thing. It was like the thing I can immediately control. I'm going to answer my phone no matter what, any time of day. Hey, I'm at my kid's soccer game. What do you need? Yeah, it's 9:30 at night. What do you need? And just never to send people like the voicemail, right? And if I did, it was like, hey, just give me 5 quick minutes. It was like just that ridiculous responsiveness. And that's usually what people will kind of comment to me or come to me like, hey, I heard that you're crazy responsive. I love that. Like, da, da, da. And now people search me out to work with me, which is nice.
Wow. So you literally like took grit and you put it on steroids and you're like, let's run with this. This is going to be my super. And then you added other values on top of it. Like, really good rates, really good process. You're doing the hard deals. So how many builders did you visit? And then how many did you end up working with out of all those?
So I would say probably close to 15, maybe even 20 different builders that I would call on. I use like different platforms like Zonda. I would get on MMI. I would get on Redder and just find people, cold call. So it was like if I'm back in Colorado Springs, I was trying to make 50, 60 phone calls a day. And half the time people would just hang up. Hey, I haven't got time. Talk to this person, right? But you just keep going, and in person, just try to be very strategic. Who's your preferred lender? Okay, I've heard of them. They're really high cost, or they only do the squeaky clean files. Great. You get anything like this, call me. And it was tough. I mean, I got discouraged a lot. I'm not going to deny it. It was a good 6-8 months of like, 1 month doing 2 loans, another month doing like 1, 4, right? And then 1 month I remember I hit, like the bank account was looking a little low, right? And I did like 8 loans. And I told my wife, I was like, oh wow, hey, we did 8 loans, and then the next month we did 12 and we did like 14 and then it was like 20. And I was like, holy smokes, like, okay, we like, because I was processing everything. So I was scrambling and, contracted third-party processing company. But then from there, it was like the match was lit, so to speak, right? And we had some traction. So it was great.
That's incredible. So you were making 50 to 60 cold calls a day for 8 months on top of one.
Yeah, we would focus, I would focus 3 to 4 days a week of just cold calling. I mean, I was doing everything from even calling for sale by owner clients and telling them to offer me with a preferred lender incentive, and that I would offer the clients that came in to give a better rate because I knew our margins were lower. So I was doing things like that. Realtors, so it wasn't just strictly builders, but yeah, I mean, every aspect together. I mean, and I used to work in a call center, so I got a dialer, an auto dialer, and I would use one of those platforms and build out the dialer and just go and hammer through it, leave a voicemail, and then I had kind of a baked script with a follow-up and said, hey, I need your email, I'm gonna follow up, recap everything we talked about. And that's what I was like, and I would say 10-20% of them, something came of it, right? But in those things, you're going to get a lot of rejection. I mean, a lot. You got to have thick skin in any type of industry like this when you're building something for yourself. You get comfortable with the failure, but I think you learn from it. So by day 3, I'm making that many calls. It's like, but yeah, you got to. People always say, oh, I made 10 calls today. That's great, but you should, make 20 the next day. And then we make 20, make 30 the next, like really like make it a point and have a good, because by the time you do that for a week or 2, you're going to be an expert in what you're selling. Now, whether that's yourself, whether it's your company's product, whether that's a niche and you just want to call people on reverse mortgages, whatever the case may be, you'll become super proficient in how you're, conveying that.
Yeah, that's it. Nothing replaces volume in terms of building skill. Like just because you get so much micro feedback so quickly and you adjust your script, you understand your value better.
Yeah.
It is so effective to just do volume and everything else will take care of itself. So this is really interesting to me because you knew you wanted to go for builders and that's what the business you wanted to build, but you had time and there just isn't that many builders. So you're like, I want to fill the time. Maybe I'll get some loans out of it. You're calling FSBOs, you're calling realtors, and just nailing down your offer by just repeating it so much.
Yeah.
And I mean, is this what was giving you like that one deal, two deals a month and keeping you moving at the beginning?
Yeah, it was mostly like one builder really took a liking to me. They didn't really have a preferred lender. They were having like a little bit of a relationship issues with them. They were going to close about 20 to 25 homes in a year. It's a really small builder. So, you know, and I did close one loan with them previously when I was at another company. So I had a little bit of an in with them. Met the gentleman out there, super nice guy. Still have a great relationship. He's one of my, you know, best friends that's out there now in Texas. And I always tell him, I was like, you're the first one, man. I give him all the gratitude in the world. His name was Adolfo. You got to give him a big shout out. He was one of the first guys to give me like a really big shot. And yeah, just a kind guy, you know, and a family-oriented builder. It was a father and two sons. You know, sadly with COVID, the father passed and the sons kind of upheld the legacy with the builder, and just a great company and great people. But yeah, they took a really big liking to me, and I was giving them, you know, they were smaller, so they couldn't really offer like the huge incentive that some of the other builders were offering that were doing 100 homes a year. So, you know, my model really helped them a lot. And the customer service we were offering, communication, and it's been great. Yeah, so we've had a really good run. But from there, you know, a client goes and looks at their model, and okay, maybe they really like them, but maybe they didn't fall in love with that home, but they love the rate I gave them now. Well, now they go to the next builder, and now they get quoted by that preferred lender, and they're like, whoa, this guy was giving us less incentive and got us a better rate. Where's all this money going? You know, and then it's like me educating the client, educating the realtor. Okay, then negotiating, can you give Brandon the preferred lender incentive? Great. And then boom, now you break into that builder. And then it just kind of domino effect.
Wow. So it's like success begets success. Like you didn't let anything go to waste. You're using every opportunity to get in and show your value.
Absolutely.
How many builders do you work with now?
It's funny. I just sent a email out to the team yesterday. We have 13 builder relationships right now, all kind of small, medium-sized builders. I would say our smallest ones are probably still in that 20 to 30 homes a year, and our largest are doing probably like 250 to 300 a year.
Wow. And are you like, when you say you work with them, like they're sending you leads and you don't capture everything, or like your preferred lender?
Correct. So a lot of in the markets I'm in, a lot of the builders are, they have multiple preferred lenders. So again, me not being local in some of these markets, that does, I think, impact us a little bit. We've tried to hire people locally, but it's challenging. But I would say the main ones, we have like 5 that are very loyal to us, where they're like the primary preferred lender. You know, we probably are doing about an 80% capture with them. And then we have a lot of other builder relationships where, you know, we're the ones like I cue the Superman music. They call us, you know, in emergencies, right? We come save the day. So whether it's a client who won't budge on rate, whether it's a, you know, manual underwrite that nobody else will touch, or, you know, believe it or not, I don't know if you feel this way. My team and I chuckle because you'd be shocked how many loans are structured improperly by certain loan officers in the industry. And you take a look at it, you're like, why did they just do this? And then I get nervous. I'm like, is there something else I don't know about? Like, and then I'm like, wow, no, this is just a straightforward loan. They just didn't know how to, you know, structure it properly. But again, I think that's just from how I kind of was like baptized by fire in the industry. When I first got working for my builder, I remember calling my brother, like panicked because I wasn't super strong. We were getting 14, 15, 17 apps a day in 22 in Texas. So I was pulling like 380 FICOs, which I didn't know FICOs went that low. I was pulling like 4 national income, DSCRs. I mean, it was like, boom, just dropped on my lap. And just, I had a sales manager who at the time, I hate this guy, but I've learned to kind of love him because, and we don't work together any longer, but he definitely made me be a better loan officer and just better customer service, because the app would come in and be like, okay, Sam applied. What's his credit score? You know, where's he at? Like, can he prove? And it was like 3 minutes into the application, like being completed. And then boom, it was another one. Okay, now John just applied, and you know, this guy applied, and I was like, it was overwhelming. And I was a team of like 2 with the builder that I was with at the time. So that really kind of taught me how to do, and it goes back to like our repetitions and at bats. It's hard for younger loan officers or people entering the market to get those level of at bats, I think, today, unless they intentionally put themselves in that type of situation, you know? And that'd be my advice. A lot of younger loan officers, if you want to get in the industry into something you want to do, I would try to go work for a captive builder or a call center. It's going to chew you up and spit you out, and you're going to hate it. And I'm not telling you to stay there for a decade, but whether it's a year, whether it's 2 years, treat it like a farm team, playing baseball, trying to get to the majors. Let that be your place to get at bats, because you and I know, I went to retail, I went to bank. You could sit at your desk and that phone may never ring. That lead you get from that company may not, and you're doing two loans, 2 applications, 3 applications in a month. You do that in a year. Okay, so now you're at 36, 40. I was doing that sometimes in a week or 4 or 5 days. So it's like you just get hyper accelerated and you learn a lot. You're going to fail a lot, but you're going to learn a lot.
Yeah, that I cannot underestimate that repetition. When I get brand new loan officers who ask me like, Sam, what should I do? I tell them, I used to tell them, just go join a bank.
Yeah.
Or like even a call center. But I think bank is the best because you get a lot of training. But recently I've come to understand actually builders are the hidden gem. You get a lot of repetition. They have great training programs. You understand the business from the side of like incentives. Banks don't really align incentives.
No.
But builders do. And like you really understand the realtor, the client, the lender, everybody. And it's so good. And I've just actually in the past 2 weeks, I've started to really shift my mindset. But it is much, much harder to get in with a builder.
It is. It is. I was fortunate that I had a kind of like a relationship in that kind of like put me in a position to succeed, right? But it was funny, the market that they put me in was a newer market for that builder. So the builder just bought out like an even smaller builder. The mortgage company was diving in there. They had no local representation, and nobody wanted to go there because it was FHA, VA, predominantly, near the border. So predominantly Spanish speaking. I don't speak Spanish, right? So they send this guy and they're like, oh yeah, because I was like, I'll do it. Send me anywhere. I was even willing to move out there. It was like south of San Antonio by a couple hours. And I was like, what's the worst that could happen? And I remember going out there, and one of the division presidents for the builder was showing me around, and we're walking the models, and my phone kind of switched off, and it was like international roaming rates apply. And I was like, what's going on here? And you fly down there, but you're not paying attention. You're just like, I'm all excited. And he's like, oh, like literally like right there. He's like, that's Mexico, like 50 feet away. You know what I mean? I'm like, oh, okay. I'm like, all right, we're at the border, like we're south, But no, it was a great experience, great people, and it was really cool.
That's amazing.
Yeah.
You've built something really amazing already, and you work a lot.
Yeah.
What is your next goal? What do you want to build next?
So I think the path we're heading on is, it's great to get these builder relationships. It's great to get these realtor relationships, but like anything that's worth having, it takes time, and you have to grow it and you have to nurture it. So we're really diving into more direct to consumer. So we're going to be trying to make more offers, direct to consumer in certain markets. I really love VA loans. We're trying to do more in VA markets. We're adding more states, Arizona and Tennessee. We just are in the process of adding right now. Arizona just came through. But those are the things where I think we need to, as much as we know how to build our business, we know how to build our realtor business, we're going to still continue to do that. But, like what we're doing right now is, I need to get back out there, educate the masses as much as I can. I think I have a unique perspective, and try to deliver value for people. And whether they use me or not, that's fine. I think just delivering just really good, honest value to help people, because there's not a ton of financial literacy when it comes into mortgages. There's so many things I think people do on a day-to-day, right? Of just changing money. I mean, think about like you and your wife, you might just exchange money from account to account and move things over. And you and I know, looking at that from a loan officer, it's like, oh my God, there's 35 transfers. Like, how are we going to source all this? So, I think there's a lot of little niche things that nobody knows that we do in our industry that maybe we could help people. And I always want to stress that I feel like the real estate market pressures people of like, you go on Zillow, you look at a house, you click that button to call that realtor, and now you're out looking at houses, submitting out offers. And I really would love people to start going the other way around and saying, okay, great, I love this house, it's $550,000. How am I going to afford it? Right. And coaching them and saying, okay, let's look at your application. Do you need a little credit boost? Do you need to save up a little bit more money? Are you even able to look at this house at 550? Because too often times, at least what I see a lot, is clients are looking at these homes at 550, and maybe they're more of a $400,000, price point. That makes more sense, right? It's almost like your physical health. I probably wouldn't be the best guy to go run a marathon today, right? But there's a lot of people who you could just go pull off the street and be like, hey, you ready to run a marathon? And they can finish. And that's like their same kind of financial health, I think, with individuals. Some people are just going to walk in to a bank or apply for a mortgage, and they're going to easily be able to qualify for that loan. Some people are going to need to work out or kind of see where their financial health is going to lie. And I think that's something the general public needs to understand a little bit more, and it's not scary. It's not, some places, again, I've seen a lot of loan officers or companies are like, oh, hey, sorry, Sam, you don't qualify. And that's it. And then just you're out the door. So we really try to, there's a lot of people that don't qualify with us. So we try to put them in a situation, hey, this is the credit score you do need. This is how I can get you to this credit score. Unfortunately, housing is getting a little out of reach for some individuals. And that's the thing that you have a conversation with people and say, hey, you're young, you're at this job, you need to make this much per hour, or hey, that, and this is the other thing I see constantly right now in this industry is super expensive car payments, right? So it's like, I don't know, that BMW, it's gorgeous, man, but at $792 a month, it's like, do you need it, right? Can you dial it back, right? So it's trying to have those tough conversations with people to prepare them. So those are the things that we want to dive into, bring some education, but bring some offers directly to consumer, dive more into tech, more into AI. All those things are coming. They're here and they're going to be part of us. And I don't think they'll replace us like everybody else says they're going to. I think people are still going to want to have that human connection. But I'm sure Rocket or somebody will have it where, you link with Plaid or, whatever one of those companies are, like Work Number, and then boom, you'll get instant approved, and some people will take advantage of that, and that's fine,
Yeah, it's a really good that you're bringing up. I actually do see a lot of movement from really good loan officers identifying the next sign of the market as these people, I call them like fringe clients, the ones that just, like you said, they need that extra fitness to get to the shape of buying.
Yeah.
Now, do you think the strategy of going direct to consumer is at odds with your current builder business and running lean, or does it actually lead into it?
No, I think it actually leans into it, because now instead of having that client go into the builder and then, whatever they're looking at, I think if we can structure the correct offer and present, the correct education, I think people get excited when they're online. I know I do. If you see a cool product, if you see someone who speaks well or looks confident or is educating you on something, I'm much more likely to gravitate towards some of their products, right? So when I'm being educated, so I think we can kind of tap into that a little bit and just show it's like, hey, we actually care about you. We want to give you a really good rate. We want to make sure that you get into the home. The biggest thing is I don't want to ever see anybody lose a deposit on the property, right? Or sell a home and then all of a sudden, oh my God, we can't get into this home, right? So, but no, I think it segues very naturally, and I think it's something that not only our business but everybody in our line of work has to crack that code, whatever way you're going to get direct to consumer, because without, I don't think you'll survive.
Yeah, I think that direct to consumer is going to grow for everybody, and it's never been easier to do it, but there's more competition for it. Which I don't think it's real competition, frankly. I think it's a lot of noise, but in that noise, you can stand out. So once you create your messaging, and you're a very good speaker, once you kind of get your dialed in with the messaging that really resonates with your type of audience that you want, it's very, very effective strategy. Is there numbers behind your goals, or is it just like you're going to want to build a direct to consumer channel?
Yeah. As far as for the company, I mean, I really think we can be like a $300 million team, and that's my goal, is to really get to that level of production. It's going to take a lot, I'm already skipping over 100 million, because it was funny. That was a goal of mine early on. And then this year kind of really went, crazy trajectory. I was hoping we were going to hit somewhere around 50 million mark this year. And then things just really picked up and got really good for us. And we made some good relationships along the way. And, I remember calling my brother, I'm going to hit 75 million this year. I'm like, that's great. Man, 100 million, that's, to me, that's a small goal for next year, just 25 million. We really got to 125, 150. We got to really, I think if we're not near doubling our business and what we're doing, because I do feel like we're doing something so unique, then we're not putting enough time, we're not putting enough effort into it.
Do you think your team is set up to accommodate that growth, or do you have to build more?
Yeah, to a degree right now, I think we could easily, with the current staff we have, we could get to that next tier. I kind of like warning them right now. It's like, because there's moments where, I have like 3 main employees that are like kind of our LOAs that kind of support me, right? And I know at sometimes they're like, well, maybe they want to get 15 or 18 closings, right? Personally, each of them, and sometimes that doesn't always align, but I'm like, listen, there's some things coming for us for 2026. We have a builder relationship we're just starting in Tennessee. So we're working on that right now. We just worked with like a captive relationship with a real estate team in Arizona. And then again, some of our direct consumer marketing that we've kind of already hashed out some details with, and we're going to be running some paid ads, but it's going to be like a very big value driven. So almost like, for a product, that's going to definitely bring in a lot of leads, a lot of value, a lot more loans, a lot more closing. So 2026 is going to be a big year for us for sure.
Man, I'm so excited for you. I hope to have you as a guest again, like let's say in 12 to 18 months, and we're saying
great, yeah.
under 50 million.
Yeah, hopefully.
And then
hopefully.
300. I love it, man. No one can say you don't dream big and don't think big.
Yeah, why not, right? You gotta have big goals and try to strive for them. Why not?
We're gonna come back in 12 to 18 months and we'll see where you are. I'm so excited. Can loan officers reach out to you?
100%. Yeah. All the time. I could give out my email, my number. What are you looking for? Yeah.
What's the best way for you?
Honestly, probably I would tell people to text me, but I don't know if I should have. I don't know how many people are going to see this. I'll get some spam, right? But no, I can give my email out, which is I can get back with people. So it's Brandon BRANDON at True Rate Lending. We spell it with TRURATELENDING.com. So Brandon at TrueRateLending.com. Say you saw me on the pod. You want to have a chat? Yeah, I mean, there's no secret sauce, man. We're showing everybody the ingredients lately. You just got to do the work,
That's it. Just grit. The secret sauce is grit, and know what your competitive advantage is and tell the world about it.
I tell people short-term memory with success and short-term memory with failure, right? You can't get too high, you can't get too low. You got to just have that kind of next man up mentality, next day, let's get fired up. Let's get it moving.
That's it, man. You've been amazing. Thank you so much.
Absolutely, Sam. Thank you, sir. Appreciate it.